One, I think it's the best time to learn after lunch. So, okay. Uh, it was a great honor to be here in Kolkata, and no, I am, as he said, I am Ratna Kumar. I am the head of operation in Super Accountants, a Bangalore-based outsourcing company. No, we are mainly focused on Australian market, so that's what now I want to explain about this market, and also know what specific areas of accounting as an accountant or chartered accountants you can think about working as a global outsourcing platform. Okay. So how many of you want to do no global accounting? Everyone. Yeah. So okay. Yeah. Not much. Just no. Should we wait for some? Should we wait or? So so we can continue or? Okay. So like no, you are aware about US market, UK market. No, what I could see as an Australian market, it is associated with India for a long time. Maybe like from 20 years before, no, we were. You want to zoom? Maybe I will share that slides. You can watch it. Yeah, you can watch it later. So Australian market is very close to India. As everything is like Indian accounting because we are all based from the British. So the concept, the accounting, the logic, everything is same. Only two or three, no, which you can easily relate also. That's all the new things now which now I want to highlight today. But almost the accounting part is completely same. The taxation part also, no, you will have a small. You can always relate with the Indian accounting. So there is no greater differences. Okay. Yes. Yeah. First I will cover it. Then we know we can have the session. So as in this slide, this slide is from the ATO website. The ATO is nothing but like how we have Indian no, income tax. So similarly in Australia it is called as ATO, Australian Tax Office. So that is governing the act, and they are providing all the provisions, all the changes, all the updates. So everything is from the Australian Tax Office. So that's the first thing you should be knowing about who is the authority looking after the Australian accounts. So it's the Australian Tax Office, which normally we call it as ATO. So from this data, you can see like 12.2 million individuals. No, it's an accounting. ATO is income tax department, like how we have an income tax department in India, Australian Tax Office. So that's an authority which will collect all the returns, whichever we are submitting. So we have around 12.2 million of individuals and business returns, and it's managing about 9,56,000 employers details. And I just want to highlight is the tax practitioners, like how we have a CA firms here. There are 38,600 chartered accounting firms here. of which now 27,300 is a registered and active tax agent. So what we call in Indian term is like a CA office, who any individual can go and wants to get their tax return file and want to get their details. They are approaching. Similar, we call it as tax practitioner, and there are 27,300 registered tax agents. So the tax agents can be a CPA or a CA, whoever is completing their professional course or have to register with the Australian Tax Office so that they are licensed to provide the taxation services. And there is also another area of agents called BAS agent, which is nothing but what we call here as GST return. We are filing in India GST returns. So in Australia, you have a separate agent called, they will do only for the GST filing. So they are called as BAS agents. So these are just I'm giving the outline of how the Australian structure is and which body is governing. So why Australia is, actually there is a shortage of accountants there. There are many firms now looking for accountants because of the cost. The Australian firms are not able to afford, and the people are also shortage because many are migrants, and there is a change in their jobs. So all the accounting firms are looking for a permanent or someone who can work for them. So shortage is there, and that shortage only is coming to as an outsourcing. And every firms in India, even there are many accounting firms in outsourcing firms in Philippines, Vietnam. They are all doing the accounting work for the Australian markets. So opportunities in India, I don't know how many of you heard about the gift city in India. It's in Gujarat, and you can see there are a lot of outsourcing firms doing accounting services. Our Indian government also has given a concession of setting up an global accounting offices in gift city. And you can see a number of Indian chartered accountants are having their office in gift city, and many are doing outsourcing. I'm just putting some screenshots so that you know that there are already people are doing some outsourcing accounting work. Today also morning, chairman was saying that he wants to take a tour to the gift city so that people can visit how the outsourcing works practically. How our Indian companies are doing. So I'm not sure how many of you are able to get that chance. If not, also next time when you get a chance, go and visit that gift city, and you will get a wonderful idea about how actually the outsourcing is operating from India. Okay, these are the major works which you can see as outsourced, especially from Australia. One is the bookkeeping, payroll, audit assistance, and the tax return works like individuals, partnership, trust, private companies, and self-managed super funds. So these are the key areas of work which you are able to get from Australia. And many accounting firms they are looking for a full-time employment or a contract basis who are experienced in these areas so that they can directly outsource, and from the Indian or any other location people can work directly as an employee to them. Yes, we have the course for the outsourcing, Yes, UK, US, and Australia, all the courses we are having. And about Australia, what you should mainly know is about the financial year. No, all this now I am just giving you the background so that you know about the overall how the Australian entities are and the system is working. That's all. So from there now I will go into my core area of self-managed super fund, which I will explain you in detail. Two? Yes, I am sharing. Yes, yes. I'm already shared with ICAI, so you will get from them. So first what you should know is about the financial year. Their financial year is from 1st July to 30th June. So it's in India we have from April to March. Similarly, their financial year is July to June. And yeah, correct, correct. So you can able to understand about the background. Okay. So financial year is July to June, and you will have 1 year time up to next 15th of May. You have a time for filing the tax return for the individuals, companies, and based on whether you are a new entrant or whether you have filed in the last year, based on that, your due dates may change. But generally, when you are regular in your filing, you will have like almost 1 year time. Okay, just 15 days will be short, just 1 year time to prepare your tax return and lodge with the ATO. And the act, they have is Income Tax Assessment Act 1997, and it is governed by the Australian Tax Office. GST also we have similar to here, but they have from long days. So India we recently almost now 5 years now. Yeah. Yeah. So, but they have even before that. And it was a 10% fixed. Either you will have a GST or GST free or GST excluded. These are the three options you have. You will not have a different rate of GST and all in Australian market. And you should also know about what is ABN, ACN and TFN. TFN is nothing but our PAN number. We have PAN here. They used to call us tax file number. And ACN is nothing but a company registration. When you want to register a company, we have an Income Companies Act, and it is governed by the corporate entity, right? So ACN is the number given by the ASIC, Australian Security Council of Australia. So they provide the ACN, and everyone should have the Australian business number also. So these three numbers are very important. Whenever you are finding any business, you will come to know about all this. ACN number is only required when you have a company. But Australian business number is ABN is required for everyone, even though you are doing as a sole proprietor or partnership, but ABN is required. It's an Australian business number. Someone is doing a business should have this ABN number, and ACN is required only if you are a company. And TFN, as I mentioned, it is required for all the tax returns whoever is filing. It is okay. And tax agent and BAS agent. So tax agent is nothing but the audit office which we do. Whoever is filing the tax return, whoever is supporting the tax returns, lodgement. BAS, as I said, it is for the GST alone. You may have a question whether a BAS agent can do the tax agent work. Definitely not, but a tax agent can do a BAS work. Okay. Only for GST filing. A BAS agent cannot do any work about the tax return filing. They don't have a license to do that. Yeah. But the problem for the Indian CAs is, most of you think whether I can do it from here, whether can I lodge it. That will be your questions always. But unless you are a resident of Australia, you will not get this a tax agent or vice agent. So what outsourcing is really works is we are supporting the accounting firms or the tax agent, whoever is in Australia. So the support work alone, no, we can do. Unless you become a resident, you may not be able to get this tax agent and the vice agent. You are clear with that? Yeah, okay. Like in India now, there are many small businesses there and there are many concessions. So one of the deep area which every one who is doing the outsourcing work will be learning about the Australian business and what are the concessions ATO is providing for them. And there are various rules. So I'm just giving you the heads up only. So small businesses have a detailed study of the Australian tax. Okay, so that is the main things which you have to understand from here. And the next one is about the franking credit. Have you heard of this word franking credit? Franking credit? Any guess?
Is it similar to US how people get credits for the tax credits they get?
Exactly, yeah. It's a tax credit, what you get. I will give you some scenarios so that you can understand what is franking credit. Okay. Suppose, you are investing in a shares. Okay. For example, I will say like ANZ is a bank there, and Australian client is investing in ANZ share. Okay. And he is getting a dividend. Okay. So when you get a dividend, the company will not give, the dividend will be received in cash or you will get it in the bank. But they also will give you an attachment called franking credit, that is whatever the tax they have paid, after tax, whatever the tax they have paid, that share of tax which you are eligible. For example, your company is there, it has an income, less expense, and it is having some tax adjustments.
It's a kind of TDS. It's not US budget then it's a kind of TDS.
No. It's not about TDS. I'll explain. So you have I'm talking about a company which has a P&L. Profit minus loss, you will arrive at a accounting profit. Then there will be some tax adjustments. You will end up in a taxable income. And the company has to pay 30% tax. Small business means 25% tax. Okay. So this profit is paid. Sorry, this tax is paid. And you have a after tax money which the company is supposed to distribute to the shareholders. Okay. As per the Australia, the taxable income itself is distributed. It's not only the tax is distributed. It's not only the dividend after tax is distributed. You got?
So it's taxable in the hands of recipient, is that you saying?
Correct. So this income is added along with as a dividend income to the individual, and he can claim this credit. He may have salary income, other income, plus dividend income, which has an attachment of franking credit, and he may be having a slab, and he is going to pay in particular slab. Okay. So he can claim this credit in his tax payment, and he can make the refund, whatever he says. If you see as an individual, for example, if they are low income earners, earlier I said company is paying 30% tax. So that is only is given in a paper form as a credit to you for your portion. Correct. So this, for example, I'm receiving $1,000 as my dividend. So this $1,000 I'm getting 30%, $300 as a franking credit. Okay. Franking credit I didn't receive, but I have a paper which I can claim in my tax return. You got it? So in my individual tax return, currently I have paid 30% for the dividend alone. So I have that paper now. Correct? The company paid. I have that paper with a 30 percentage. Now I am coming to my individual tax return. I am a low income earner. I don't have any income, for example. In that case, since I don't have any taxable income in my individual, I can claim that $300 back from the government. Got it? Yeah, IT refund. You can claim as an IT refund. Yeah, suppose my taxable income in my individual tax return I am calculating, I have to suppose to pay 30% tax on my individual. This 30% is already matched, so I have no need to pay anything. Okay. So this scenarios I don't think we have in India. Correct. Correct. But that is for everyone who it is not considering the individual slab. There may be a low income earner, there may be a high income earner. For everyone, they deducted that tax in the Indian context. But here they are considering who can claim refund, who has to pay extra. For example, I am a 45% taxpayer, okay, but I have paid already 30% for the dividend. Remaining 15% I have to pay. So whatever the income I earned from the companies, whatever I am getting, it is deep. I have to consider from each individual point only. So it is taxed at the individual point. Only the collection point is the companies, whatever they are paying the tax. You are able to understand what is franking credit? Okay, okay. So that is one of the key things now which is differentiated from the other markets or Indian. Okay. Then business activity statement. Business activity statement is our GST filing. Okay. So it depends upon the company or it depends upon the business. If the turnover is more than 20 million, you have to file your BAS GST every month. If your turnover is less than 20 million, you can file it in a quarterly basis. So that's the difference now which you have to understand. Business activity statement. Earlier I was referring BAS agent. So they are doing this business activity statement, which is called GST filing here. And the last one is about ASIC. ASIC is nothing but the Australian Security Investment Commission. They are looking after all the companies. If you want to register a company, you have to register only in ASIC. Okay. And they form the framework of all the rules and regulation related to the companies, directors, all that. It's like ROC. Okay, now we will move on. Whatever I gave earlier is about the background of, so that you can understand about the Australian things. Now I will come to my core area, superannuation. See, yeah. Yes. SMSF is Self-Managed Superannuation Fund, which I am going to talk now. I'm sorry. I'm just going back to my old screen, where what kind of works you get. Individual tax returns, partnership, trust, private companies, all mostly you will have bookkeeping for the company's trust and partnership, and the tax filing. So you will have a form for the tax filing. So you should be knowing about the provisions, what is allowed, what is not allowed, everything typical to India. All this, you will be covered. You have, as I said, as we are not a registered person from India, you cannot do directly to the client. you can provide to the tax agents or the accounting firms in Australia. Bookkeeping can be done directly to the clients, whoever is doing the individual business. My software? Software, no, there are many softwares. Predominantly, majority of them use Xero for accounting, Mayob, next, QuickBooks. So all this, it's all software. Okay, I'm talking about only the, the scope and services, but there are various softwares. Even now, Zoho is also now promoting there. That's a recent one. I can see like 2 or 3 companies now taking about Zoho. Odoo is also now coming up there. Predominantly, no, I could see like 70% of their work, you can see in Zero. So my recommendation is you can learn, you can become a Zero certified first, or there are many videos about Zeros, but that will not give you the practical hand-on experience. You can only watch. Okay, but if you want, means there is a proposal also in today's meeting that when we provide a course for the Australian accounting, global outsourcing, we should, the institute should have a licensed version of the software which should be provided to the members, so that once the training is done, they can be given some sample work to do practically, so that they will put their hands on and see how the softwares and all work. So that was a recommendation, and there was a discussion also going on. Okay. No, it's in the discussion stage. Okay. Sorry? No, it's in a discussion stage. So they are planning it. So hopefully, nothing is finalized. It's all in the thought process, and the recommendations, whatever whoever came here has given. So I'm just sharing like what is. So don't take that it's already there or it's going to come. It's in the discussion stage. Okay, but most of them has agreed that it should be there. Yeah, yes, exactly. So as I was talking, all for individual partnership, trust, private companies, except the individual, you should be knowing about the softwares for the bookkeeping, accounting work. And individuals, it's just a tax return filing work, which you should be knowing the provisions, which is allowed, which is not allowed. Okay, so this is all the general one. And no, payroll, everything is already in Xero you have, MIOB you have, even you have a private payroll also. It depends upon the client which they are using. Okay, so shall we move to self-managed super fund? Any idea what it could be? Self-managed super fund, any idea what it could be?
Like in the companies, we have our own provident fund. Is it something like that? Some big companies, they have their own provident fund.
Yeah. Some
Multinationals, they have their own. They don't have outside people.
correct. Yeah. Any other?
Social security system.
Social security system. Okay. For? Oh, okay. Any other? It's like? Okay. Okay. It's mostly about the retirement fund. Okay. If you want to relate with India, what do you want to do? What we have? PF. Okay. Private funds also is there, but most of them knows about the PF. Whenever you are employed somewhere, you will get a PF account registered, and when you will be not gratuity, your PF will be given transfer to that account, and whenever you retire, but most of them when they change the job, no, they want to take the money back. But it is, sorry? It's not about gratuity, it's about retirement benefits. Okay? Similar to pension fund. Yeah. So the name itself is saying self-managed. Okay? So these funds are managed by the individuals only. It is not by the government like how we have PF. It's not by the companies, no, which they are setting up a separate fund. It is like you are managing your own retirement fund. Okay. The control, the authority, the responsibility, everything is given to the member. Okay. They have to manage their own retirement fund. So that is the difference between what we are having. So it's a self-managed superannuation fund. Superannuation fund is nothing but the retirement fund. Yes, it's a compulsory, Australia's compulsory retirement saving system designed to provide income in retirement. Contributions are made during working life, preserved until condition of release is met, supported by a significant tax concession, governed by SIS Act and the Income Tax Acts. So this is the overview of the superannuation fund. So as it mentioned, it is to provide income in your retirement, which means no, you are not eligible or you cannot withdraw your money before retirement. So that is the main condition. Yeah, it's a pension, national pension. Yeah, similar to that. Yeah. Contributions are made during your working life and it is preserved. It is completely preserved until you meet the condition of release. There are certain conditions, only under that conditions only you are allowed to withdraw your money. Until then, no, you are not allowed to withdraw the money. And it is, you have a great concession of tax when you are maintaining your self-managed super fund. Sorry? I can provide you the links, which is available. You don't have any books. I can share my PPT. Plus, I can provide you the links in the ATO, like explaining about all this. Yeah, on SMS only I'm saying. Yeah. So why they formed this superannuation is to reduce the reliance in the age pension from the government, because they don't want everyone to depend on the government to provide their future retirement, encourage long-term retirement saving, provide dignity and financial security in retirement, tax incentives encourage compliance, higher regulation to prevent misuse. Okay. Okay, so before we move into the actual self-managed, there are, like earlier whatever we discussed, there are different type of superannuation funds also, pension funds also there in the Australia, like industrial fund, super fund. It's a non-profit industry based. The features, it is low fees, simple, default option. So all the industries, they have this. So you can just enroll into that, and you can make your retirement savings in the industrial funds. Similarly, there are some retail funds, like how we have different products for the retirement. Similarly, there are various, like retail super fund, corporate super fund, public sector funds, annuity funds, pooled funds. All these are existing there. But the major thing, you can see about the self-managed super fund. Okay. Yeah, I will explain. I will explain. Okay, so this is about the data about the superannuation fund. Okay. There are 6,53,062 superannuation funds in Australia, and it's all managed by the members. Okay, it's not a retail fund; it's a superannuation funds. and you can see like 1051.8 billion of money in Australia's total, no? It was invested through the superannuation funds. And this all the, yes, we are doing that only. That's what I want to explain. I'm just giving you the headset, yeah. Yes, there are softwares. Now first you can understand about the structure and how it is. Based on that, no, you can, we will have the questions later, no, you can know about that. Okay, so every entity, no, should we have a type, like something in a company form, something in a individual form, but this superannuation is in the form of a trust. Okay, the base is self-managed superannuation is a trust set up solely for the retirement members. So the entity is a trust form. It's not a company form. It's not a partnership form. So it should be formed as a trust model. So the model should be in the trust. Established solely for the retirement benefit. Only 6 members can join in a superannuation fund. Okay. Yeah, maximum of 6. Every fund, you can have a maximum of 6 members. And if you see, mostly the family members will be in the super fund. Okay. A husband, wife, sorry? It's like a HUF, you can say, but that is doing business. This is not for the business. This is only for their retirement saving. As a family, they are planning for their retirements. Okay. So maximum of 6 members only is allowed to have a fund, and every member who is joining this superannuation fund should be the trustee. So a member has dual responsibility. He is a member, he is bringing the money, he is also a trustee who is looking after and managing his money plus others' money. So he has a responsibility that others, nobody is taking the money out also, even others has a responsibility that his money is not taken out. So it's a mutual that everybody should be a member as well as a trustee. No salary. Because it's their manager, it's giving the responsibility only. The act is designed in such a way that a family can look after their retirement in a combined way, because if you do as in an individual way, only you will have a smaller money. So obviously you think for a common platform like retail funds or government funds, whatever is there. But if it is a group, at least 3 to 4 members' money is accumulating there. Then they can plan for a better investments, which can give a higher return, which can be preserved for every year, and it can be used for the long term. When they retire, they can get the money. Or even if they retired or someone has died, the other member who is a close relatives, who is a close member, family members, they become the beneficiary, and there is no need to disturb the investment also, whatever has happened, because a member has died. So it's a family structure. They have this model in such a way that a family as a group, they are planning for each one of their retirements. You understand the purpose? Why they are having this retirement scheme as a self-managed? So up to 6 members, and members are the trustees. They are the members, they are the trustees. Okay, and you can see other word like a trustee company. Okay, so a trustee can be either an individual, or they can have a company also. I will explain why the difference and what's the benefit also. So the trustee can be a company also. If you are having a company, obviously the members should be the directors of the trustee company. All the members. Either you can have as an individual trustee. 4 people are there, they are members. 4 people can be the trustee. They should be the trustee, right? So they are all individuals. There is another option that A trustee can be a company. I am just creating one company and naming that as a trustee company. And these 4 members should automatically become the directors of the trustee company. In a way that, no, end of the day, they are only managing it. The responsibility is given among the members only as a trustee. Is it confusing or clear? Clear, okay. So 2 things you have to understand. One is, a member should be a trustee as well as he is a member. And you can have a corporate trustee. If you are having a corporate trustee, then a member should be a directors of the corporate trustee. As I was talking about, trustee carry full legal responsibility of managing the funds. Okay, so what are the responsibilities? Understand and comply the superannuation law, act honestly, prudent in members' best interest, prepare and maintain the financial record, ensure assets are held separately, arrange annual audit and tax lodgement. These are the main responsibilities of the trustees. Yes. Trustees and structure. Who can be a trustee? So now comes about the age eligibility, whether a minor can be a trustee or not, all that. So at least it should be a member should be 18 years old, not under a legal disability or such as mental incapacity, not disqualified. Type of trustees, as I said, there are 2 types, individual and corporate. Now I will talk about the difference. We are talking about individual trustees, corporate trustee, no? What is the difference? Why, no? Most of the companies, no, they are looking for the corporate trustee. Most of the super fund, no, they will be looking for corporate trustee to be have. The reason is, when you have as a structure, members act as a trustee and company, if you find in the companies, they act as a director of the company. I am setting up the super fund. Okay, now the next step is, we are going to buy a fund. We are going to invest somewhere, right? When you get a contribution, you are going to invest somewhere. So if you are investing, there should be a name. So everything is legally registered under the trustee's name only. Okay. So when you have an individual trustee, there are 4 individual trustees, means all the documents will be in the name of 4 people. A plus B plus C plus D. Joint. So it is joint. A plus B plus C plus D. So everything, whatever you buy, whatever you transact, everything will be in the joint name. Okay. So that is becoming a issue, or no, it has a cost involved, because when there is a change in the trustee, you have to change all the documents. Earlier 4 members are there. For example, someone has died. Only 3 members will be there. So you have to change the entire documents stating that 1 member has died. So we want to change the document to 3. So these are the normal issues which you will face when you have a individual trustees. That is why we are recommending to have, or most of the superannuation funds they are having a corporate trustee. Corporate trustee means entity is there, every investment, everything are registered under the company's name. Even if one of the member has died, only the director is changing, right? So the entity, whatever the investment you are registering is not going to change. You understand the difference?
Like company, continuing existence.
Yeah, company is always in a continuous existence. Only directors are changing. A member died, obviously one of the director died. So the remaining all there, and they can decide, because as a group, they can decide that who can act on it. So as the ownership is now in the name of the company only. So no legal document is to be changed. That is the benefit of having a corporate trustee. The superannuation is found for individuals only. Then they thought this difficulties and all there. Then after that, they changed to have a corporate trustee. So a corporate can be a trustee, and a members can change in between that. You are clear? Yeah. A company will have, for a company will have 6 directors. 6 directors. Because if you have 6 members, you have a corporate trustee. Obviously, the 6 members will become the directors of the corporate trustee. So there will be 6 directors.
Is it a unique kind of thing over there? Because is this the main course accounting over there?
Yes, because in the outsourcing,
Specialized area.
yes, this is the unique area of doing the accounting. Everything is common. Like as I said, no individuals, company, partnership, trust. All this now you can easily relate with India and you can understand. So this superannuation fund is something unique. We are going to do only the accounting work, but still these concepts are important. Without knowing what type of structure it is, who are the trustees, who is signing, why there is a change, you will not able to relate what it is. So mostly now the accounting work is completely done, no, they are outsourced. And they are doing some tax planning work with the help of advisors. And if there is any changes also, no, you used to get some documents. At least you should know this concept or the background so that you are able to relate. So that is what I want, my agenda was to give this basic thoughts only. Always after if you understand everything, again you are going to do the accounting work. Accounting is always same. Okay. So these are the key things now which you have to understand. No, all the investments will be in the name of the superannuation fund, the trustee name. Okay. See, the retirement benefit, this product is now, the purpose is for the retirement benefit. Okay. You cannot take it any time in between. Until you meet the condition of release or until you meet certain conditions or until you retire, you are not allowed to withdraw any money from your savings. You got it. We have a PF here, right? You cannot, whenever you want, no, you cannot able to claim. There are certain norms here to withdraw. But the main agenda or main purpose is, it is for your retirement, right? After your, sorry? Yeah, whatever they are contributing plus their share of profits, it will be added and you will have an account. Like each member will have their own account balance inside the investment. So every member will know their account balance. Ratio of their, correct, you are right. For example, there are 4 people, 2 members are contributing, they are employed. So from the employer, no, you are getting a contribution. And there are 2 children, they don't have any income. So even though there are 4 members, this 2 only is getting the contribution. So whatever the income is earned from this, which is added into the fund, also will be shared in their weighted average ratio. So they will get the rate. And the 3rd child, when he start works, then he will get his contribution. Then the share of profit will, whatever he is having the balance, the same profit will go to him. So it is like accumulating, everybody will know their balance. But it's a joint account, that's all. I will explain all that. There are provisions, there are act which is telling about how much you can contribute, how much you can withdraw during the pension, all that now. Yeah, even there is some restriction. You cannot transfer whatever you have excess money. There are certain rules and yeah. So the major company structure is only about this. Okay. Okay. As I was saying, this is superannuation fund is done by the members. Are they able to do everything? Because I am a engineer, I am earning. I want to contribute for my retirement. I don't know about any accounts. I don't know about any accounting. I don't know about the tax laws. So, even though it is self-managed, even though the responsibility is with the members, I mean with the trustees, but still, no, they need someone to assist, right? They need accountant, they need advisors, they need a tax agent. Okay, so it is called as do it yourself. But still, no, if an individual is well versed of, sorry? You have to depend on others also. But it is a do it yourself concept, but still you have to depend on others. Only thing, no, you can, for investment planning, you can, without advisor, I know, a member can decide on their own. Okay, we will invest only in the property. We no need of any advisors because now property is safe. If they decide among themselves, so they are not using the advisors because it's a do-it-yourself concept. But still they need a tax agent because they have to file their tax return every year, right? So the model is do-it-yourself concept, but still you need someone to assist. For example, SMS of auditor is required, financial advisor is required, tax agent is required, accountant is required, administrator is required, legal practitioner is required, market valuer is required, and actuary provider is required. So everybody's support is required, and we are part of that. We are one among them, that is accountant, who can do the accounting work for the self-managed super fund. So the regulatory bodies, ATO is the regulatory authority, and if you are having a corporate trustee, then automatically ASIC is coming into picture, where you have to register and you have to pay your every year renewal fees to the ASIC. So these two are the main bodies now involved with the self-managed super fund. And this is the governing rules. Individual trustees and the directors of the corporate trustees must follow the rules in the trust deed. As I was saying from the beginning, this setup is a trust model setup, so it needs a trust deed. Okay. So the trust deed is nothing but the bylaws of whatever the rules and regulations they want to have for their fund. So plus above the trust deed, whatever is the tax provisions is saying, they have to follow this. And if you are having a corporate trustee, then obviously company constitution and the Corporate Action Act. And this is about the SMS of residency and ownership condition. A self-managed super fund is an Australian accounting fund if it meets 3 conditions of the residency. Okay. You are asking about whether we can do it from apart from Australia. No? Can we do it from India? So if you want to register as a SMSF, this is the condition. Okay, it should have a residency condition. It should be established or has asset held in Australia. So if you want to have your fund, it should be established in Australia, and all the investments, the assets and all should be held in Australia. Central management and controlling authority should be in Australia. And active members, that should be an active member. For example, someone from India, they were in Australia for long years, they are having their fund. And one day they want to come back to their hometown, India, so they came back, but still they have a self-managed super fund, means they cannot continue that self-managed as it is, because central management and control authority should be in Australia. Everybody are here, the family members, entire family members came to India, but their superannuation fund cannot alone exist there in Australia.
But suppose there's an Australian citizen working, suppose in Kuwait, and owns somebody. Can he have a self-managed superannuation fund there?
Yes, but
Australian citizen but working in Kuwait.
yes, they can, but that's the residency period is there. They should be traveling back to their own country. It has an individual residence period, right? You have in India 180 days, no? If you should be a resident if you are termed as a resident in India, you should be there for 180 days, right? Similar.
So what happens to Australian citizens working abroad? Suppose they're working for, they do not go back to the, Australia once a year. Then we cannot have, how does their superannuation work?
Based on these three conditions only, either the central management and control should be there. For example, only the husband is going out, the wife is there, and the two members are there. Majority are able to decide from the Australia itself. It can be possible. But most of them have left, means either they have to close their super fund and transfer to the public fund, and they have to move out.
They have to transfer the money to the public fund.
Public funds.
They do not get the funds.
Yeah, no, the purpose is for retirement. Until you retire, you cannot take any money.
So if it moves to public fund, can they claim the retirement benefits out of it?
Yes. Based on their residency status condition. If they are returning back, if they, after 5 years, they want to return back, it's all their decision only. If they want to return back in Australia and they have to be in the, after that, they can decide that it can be moved to the public fund.
They can get it back from the public fund.
Yes, yes. It's like our PF, wherever we are contributing after our retirement, we are getting, right? Same way. Okay. So how to set up an SMSF? To legally set up, you have to choose your structure. Structure here, I am talking about whether I need a corporate trustee or individual trustee. Okay. And you have to appoint your trustees. Okay. Check your SMSF is an Australian superannuation fund. Create a trust deed. You have to create your trust deed. Register with ATO within 60 days. You have to apply to the ATO and you have to get your ABN number and TFN number. Then with that ABN and TFN, you have to set up bank account for the SMSF. Next, you can hold asset in the name of super fund. And there are other areas also which is key important. Maybe in the later stage you can understand, like it is electronic service address. For example, I have created my fund. Actually, I am working in a company. So the company is supposed to provide me super, like how we are getting a PF from our employer. So in Australia also, every member is eligible for 12% of their salary as the super, which is contributed directly to the respective fund which you are nominating. So since I have my self-managed fund, I will be nominating my fund so that every company can transfer the money to their superannuation. You got it? So to make the transfer easier, earlier there was, everybody should give the bank account of the superannuation fund. Now they made it simplified, like how we have a UPA with the number we are transferring from one person to another with our phone number. Similarly, they have this electronic service address. Okay, if you give that electronic service address, so the employer is able to easily transfer the money to your superannuation fund. So that is what is talking about the ESA, electronic service address. Okay, then you have to create investment strategy, members to provide SMSF details like ESI, bank account details, and employer to contribute. Member to has an exist plan also, like when they want to exist. Maybe during my retirement, we want to close this fund. Or there are certain conditions under which they can even close before that also. For example, the relationship broke down between the trustees. There is a separation of husband and wife. They want to separate and they want to close their existing fund. Definitely, in that case also, they will wind up the fund. They can wind up the fund. They can take their existing part of money and transfer to their other funds, wherever they are moving out. But still, you cannot withdraw the money. Okay. Until you retire or you meet the condition of release, the money has to be transferred from one fund to another only. Whether you are managed under the self-managed or under the public or whatever the fund you are having. And the lack of time to manage SMSF. We have created my SMSF, but the trustees has no idea, or they don't know where to invest, and they don't want to do. Better we go back to the public funds, means they can decide and go. Then poor performance, they invest somewhere, they are going into loss, they don't want to have it hereafter, they can close it off. All members left, everyone decided, no, we will go to different funds, they can close it off. And death of trustee, someone, member has died and the other member also don't want to continue, they can close off the fund. So this is the overall setup and the when they can decide to leave the fund. This topic is about investment. Okay, so where they can invest? Where the money is coming. The money is coming from the contribution. So each member is working somewhere. From the employer, the contribution is coming here. Even they can save their excess money into the super fund, and everything you have in the bank account now. Now you have to invest somewhere, so that it accumulates. So accumulation is important, right? So, unless you accumulate only if you keep the balance in the bank, then it will not grow. So if you want to grow your fund, you have to invest somewhere. So this is the SMS of investment areas. So all SMS of investment must meet the sole purpose trust, be made on a commercial arm's length basis, always stick to true market value, show clear legal ownership of the fund, must specific restrictions on investment. So these are the norms for the investment, where you have to invest and under which guidelines it should be invested. Yes, they can invest in. So I have listed down the common investments where they can make the money investment. Term deposit, shares in listed company, shares in listed companies overseas, managed funds, unit trust, real estate property, cryptocurrency, investment in arts, and investment in gold. All this, they can do their investments.
These are all for the employed people, not for self-employed people.
This is for the self-employed as well.
This is for the self-employed as well.
Yeah, this is for the.
A practitioner also can have a
Yes.
superannuation fund.
Yes. Yeah, they can invest in Australia. So I think this will give you some broader idea of how the monies are flowing in the fund. Okay, just the inflow and outflows. I have just separated as member related and the fund related. Okay, if you see member related, this main inflow is contribution. If you are employed somewhere, your employer has to give you a contribution that is directly coming to your superannuation fund. So that is the main contribution of money is coming every year, every month into your superannuation fund. And the second one is about the rollover in. Rollover in is nothing but you have other fund, you want to close that, and if you are transferring to this fund, that is nothing called rollover in. Okay. And insurance proceeds. You have an insurance policy and you got a maturity amount which you want to directly remit to the super fund, that can be also done. So these are the member related inflow of money which is coming to the fund. And member related outflow, if you see, rollover out. Suppose you want to close this fund or only one member want to go out to other fund. He can roll out his money and go out. That is the member related outflow. Pension. If you have met the condition of release or if you are in the retirement age, after that you can withdraw your pension every month. Okay. So that is the outflow of money from the member account. Lump sum. There are certain incidences where you can take a lump sum money also. For example, there is a health issue, medical issue, and you are admitted. In that particular scenarios, you are allowed to withdraw your money from your pension account. So in that case, you can withdraw as a lump sum amount. and you can pay your member insurance premium from here. That is an outflow. And there is a Division 293 tax, okay, which you are paying on behalf of your individual tax return, which also can be an outflow here. If you see the fund-related inflow, bank interest, dividend, distribution, rental income, sale of asset, all these are the inflows inside the superannuation fund. How this is all coming means you have already invested somewhere. If you are invested in term deposit, you will get an inflow of bank interest. If you are invested in shares in listed company means you will get a dividend. If you are invested in some unit trust, you will get a trust distribution. If you are invested in a property, you will get a rental income. So these are the main inflow for the funds. And the outflow for the funds is all the expenses which naturally you have, like accounting fees, audit fees. So all this you can see in a particular fund. Whenever there is a fund you are working, you can see all this kind of transactions which are flowing into. Okay. Now I will explain you about the contribution. There are different varieties of contribution which you can make. Okay. Something is called concessional contribution and non-concessional contribution and other contribution. We are talking about contribution. What is concessional contribution there? Any idea? What is talking about concessional contribution? Sorry, ma? Before tax. What it means? It is not about non-tax, it is before tax. For example, correct, yeah. Yes. For example, your employer is making a contribution, right? So he is claiming that as a deduction in his company books. Okay, that means he is not paying tax on that. Okay, so that earned money of the company is only coming to the super fund to be taxed first time. You got it? See, the company is making a sales, it has a profit. Okay, so they are paying the salary, which is company is claiming as a deduction. So they are not paying tax on that. That salary is taxed at the individual hands. Similarly, this contribution also they are claiming as a deduction. They are not going to pay tax on that. So that is coming to the super fund for the first time to be taxed. Income of the super fund. So this is only taxed at the first time at 15%. Yeah, because in the company it's not taxed, right? Karthik, your session next. Okay, that's 5 minutes. Okay. So concessional contribution, there are employer contribution and personal contribution. So employer means you are employed, employer is paying, employer is making a deduction there in his books, and this is coming to super fund for the first time. So it is taxed here at concessional rate, okay, at 15%. The advantage of super fund is individual is taxed at the marginal rate based on the slab. Company is taxed at 13%, but in the super fund it is taxed at 15% only. So the lowest tax paying entity is super fund in the Australia, because the motto is it is for the retirement purpose. Okay. So that is why mostly they want to transfer their money directly to here so that they can pay only the lower tax. Okay. And there is a non-concessional contribution part. In the concessional also you have like a personal contribution. Madam was asking about whether I am a professional, whether I can contribute. Yes, you can contribute, but you can claim that in your individual return as an expense, as a deduction. Okay, so you no need to pay tax there. It is taxed here at a concessional rate of 15%. Yeah, I will tell. It is 30,000 for this year. From 1st July 2024, you are allowed to contribute only $30,000. And non-concessional no, you are not allowed to make a concessional contribution more than 30,000. It should be a non-concessional contribution. That is your after-tax money. So this after-tax money means you have already paid tax already. For example, I am an individual, I have an excess money after tax. I want to deposit for my retirement, I can contribute. But there also you have a limit of $1,20,000, which you can contribute. And there are some other contribution method also like downsizer, government, spouse contribution. This is all a minor area. But mainly, you have to know about the concessional and non-concessional. Concessional is before tax, whatever is contributed, and non-concessional is after tax contribution. Okay, so as I was mentioning, the super fund, whatever the contributions plus whatever the super fund is earning, everything is taxed at 15%. It was the lowest tax which we are paying in the Australia. Okay, so we have a tax return for the SMSF also, where we are paying at the 15% tax. The other one is about the withdrawals. Withdrawals are allowed only when you are retiring or you are meeting the condition of release. So up to 65 years, 60 years is the age for the retirement there. So when you are retired at the age of 60, or when you say that no, I am retired, you are eligible to withdraw from there. Okay, and the withdrawal also, you should when you say that I am retired, you can always commence a pension account. Okay, initially it was like an accumulation account. Your account will be named as accumulation, where you will have all the contribution received, which is accumulating. Over a period, the accumulation, when you want to commence the pension, it is converted to pension account. From there, you can withdraw the pensions till your lifetime. Okay, so 60 is the age where you are mostly majority of them, you can see like at the age of 60 they retire. Even there are people who are working after 60 also, but up to 65 they have given a liberalization. So after that, you have to mandatorily commence your pension account after 65, and you are mandatorily you have to start withdrawing your pension account. And these are some of the percentage which you have to minimum take from your pension account when you met the condition of release or when you retire. Okay. So my agenda today was to give you the overview of what is SMSF, because that is only the unique part which you have to understand from there. So today's session will give you some idea, but definitely when you start reading from the website, or when you get a chance to work in that, you can always refer. There are many videos, you can easily relate. But the background is this. This has never changed for 20 years. Only the amount of contribution, the amount of withdrawal, the percentages, all that got changed. But the structure and the obligation never changed. So this is the background. Sorry? Yeah, you have a lot of opportunities here. Many of the accounting firms, they will get a combination of work, because every families are coming to their tax filing. Definitely they have an individual, they have a company, they have a super fund also. So mostly through LinkedIn's, you can always know, first you have to familiarize yourself. This is my suggestion. Okay, you have to familiarize in the context. Then you have to start writing some articles or the whatever the law, recent law changes. There are many forums are there. From there now you have to understand, you have to comment. Slowly, you can explain about what is happening, your understanding, all that. Then based on that, when you get a connection, definitely you will get some works. Okay. And this work now most, third, sorry? There are some, mostly from the outsourcing company point of view, what we do is we go to Australia. Okay, there are some exhibitions happening over there. So we used to exhibit, or we used to attend the industries forum where we are able to collaborate. So that way, it's main. If you are from India, if you are only targeting from there for the Australian market, LinkedIn is the first source. Second thing, you have to try about doing the collaboration. You have to meet where you have to find where the people are first. Then you have to mingle there and try to collaborate with them and see where you can get the opportunities. Okay. So you can scan this QR. This is my contact. If you have any doubts, you can always check with me. Okay. Thank you for this opportunity. I hope you got some basic understanding about SMSF because it is only unique item now which you can see in the bookkeeping or in the accounting work. Okay. Thank you everyone. Bye.
Thank you very much, sir, for the insightful session on SMSF, and I am sure that we have some idea of the various contributions and the obligations relating to SMSF. Thank you so much, sir, and we'll love to hear more on the Australian accounting in the future also, sir. Right.